Payments Canada recognizes that it has a responsibility in the Canadian ecosystem to help bridge between the growing number of fintech startups who are trying to transform the financial services industry and its traditional partners. So the FinTech Cup is all about helping to bridge that gap. What's in it for the startups is a mix of things, and not all of it is money. One of the most important things for startups when they're talking to financial services companies is how to have something that I refer to as incumbent empathy. So we start off the program by coaching the companies into how to talk to an audience like this as opposed to only venture capitalist investors. Payments Canada, which has not just a local reach, but a global reach, can help bring exposure to those companies that they couldn't otherwise get themselves. They also bring them access to the other members of the ecosystem. For example, one of our partners is Swift, where the 4 companies that are at the top of the decisions tomorrow will be invited to Sibos to present on a global stage to the 9,000 or so banks that show up for Sibos in Toronto in October. And then finally, we give them some cash, which to most companies is the last thing. They prefer revenues, but a prize for being awesome is very helpful too. So in total, there's 30,000 Canadian that's going to be distributed to the 4 companies who are tomorrow in the finals. The way that we found all of these companies is we reached out to partners across Canada, including my own firm, 500 Startups, where we have a fund here based in Canada, the Digital Finance Institute. Swift helped us recruit people, as did Mars, Portage, and Diagram. This, a little bit of an eye chart, but this represents the market segments that applied for the program. Now, you'll note there's nothing technological in here. There's no AI, there's no blockchain, there's none of that. That doesn't mean that those technologies aren't behind the scenes of these companies, but these are the problems that our companies are trying to solve, right? You'll also note that payments represents a relatively small part of this. It's because innovation is happening across the entire financial services industry. So the coaching that we gave them yesterday, and hopefully you'll see the results of it in just a minute, came from not just myself, but a mix of venture capitalists and leading innovators inside of financial institutions, that whole incumbent empathy thing. Make sense? All right, so before we go on to the pitches, I'm going to call up our judges for today, starting with Christine Duhame, who's running the Digital Finance Institute. Christine, come on up. Welcome her. Prashant Mata with Omer's Venture Capital. Stop taking pictures, Prashant. Come on up. Dave Unsworth with Information Venture Partners. And Peggy Van de Plash with CIBC. All right, so here's the drill. Come on, come on. Each company is going to present for 3 minutes. There'll be 4 minutes for Q&A. I'm going to let our judges lead Q&A. However, if you as the audience hear something you want to ask about, shoot your arm up, because if these guys finish quick enough, I'm going to throw questions to you, and if not, at least the startups will get to see and come find you later. Does that make sense for everyone? Okay. So with that, I'm now going to call up our first startup. Please give it up for Branch.
Hello, I'm John Frum. I'm the CEO of Branch. I'd like to introduce you to
There
Bob.
you go.
There we go. Bob is your average middle-class guy. He's got a family and has a decent job, and he's quite reliable. But Bob has some cash flow issues. Bob represents roughly 1 out of 30 million people in North America that are underbanked. And while traditional banks want to reach Bob and help him, they have trouble getting in touch with him. So when Bob has an emergency, he doesn't have many options available to him. He can hit a pawn shop and get some cash, which isn't great. He can go to a loan shark, which is even worse, has the same problem. Or he can go to a payday loan store and get a reloadable credit card. Bob chooses the payday loan store. And this industry, the $70 billion industry, demand for it has more than doubled in the last 8 years. And all Bob's using it for is to pay a bill. And while the service has helped him a number of times, and he's appreciative of it, the deal itself is terrible. And no one's been able to solve the issue with it until now. Branch is a decentralized microcredit platform that uses smart contract technology to transform the industry into a gig economy model. We provide a distributed network of vendors and service providers that can validate Bob in his local community and reward him for being a good actor. Branch lets Bob's friends, families, associates, community organizations, anyone really, including Bob himself, provide these basic microcredit services in their community and share in the revenue. So, because the industry is mostly used to pay a bill or avoid a late charge, Branch can integrate with any company that uses a subscription-based model and wants to provide their customers with another option. And if Bob wants Branch to do it, we can pay those companies directly for him, making it very easy for Bob and improving his life. So we are a new startup, young, we have a very clever idea, and we have some fantastically experienced entrepreneurs helping us change how we deliver basic financial services in our local communities. We've been engaging with some charities and community organizations to help move this forward. And today, we're here to build traction for our platform. If you're a company that wants to help your clients, provide another option, or are just interested in new ways to deliver financial services, please send us an email or come and talk to us. Logan and I will be here all day. Thank you very much.
Woo! Well done. 20 seconds under time. You came a long way. That's great. Judges, what do you have in the way of questions, please? Prashant,
I'll take it
please.
off. Curious, why did you choose to build this using blockchain or Ethereum? You could potentially provide the same product just as a mobile app or a web applications. I'm curious why you chose to go that way.
The smart contract technology lets us send the value transfer. So we're mostly using it for a payment network. So we're partnering with a company called ShakePay in Montreal, and they have a reloadable Visa that can accept digital tokens, so Bitcoin, Ethereum. And it's a massive cost savings for us as well. So right now the industry spends like 80% of the revenue on the brick and mortars.
Okay, cool.
Thank you, please.
Thank you, John. That was a great presentation. One of the questions I have for you is, how will you scale?
How do we scale? The scale aspect is important for platforms, right? We need to build a wide variety of vendors. So that's one of the reasons why we're here engaging with local community organizations. But we are also crypto agnostic, so we can adapt our platform for any type of crypto. But the big issue is really getting out there and starting signing up these service providers and vendors. So it's one of the reasons why we want to tap into the B2B side, so that the clients that are already using it to pay bills, we can get the channel in that way. So someone like utility providers, any subscription-based model.
Thank you.
Quick question. So if I understand correctly, on the blockchain, you're going to onboard a bunch of lenders, companies. How are you going to get them to want to join part of that ecosystem and want to become, if I understand correctly, permanent lenders that will be lending pursuant to a smart contract?
That we're looking at partnerships with Decentralized Capital, Tether.to, and a couple other blockchain companies that use tokenized fiat. So to avoid the liquidity or the volatility aspect and start tapping into it that way. But we are shopping around with the private equity market as well too to find liquidity providers. Although our platform will let any individual with money, and they want to park it for short-term gains.
Other questions?
Is there any fee or like what's in it? If you want to ask me, let's say, to join to be a lender, what's in it for me as a lender? Or
about 2 to 3% every 14 days.
Okay, and then if I want to borrow, what's the cost for your average borrower?
It depends what you're borrowing it for. So if you're going for a traditional payday loan, the changes in Ontario are coming in, so it's $15 on 100 for the fees. Branch has been built our business model for 10. And if you're using it for direct payments to a company, then we'll lower it even more. So we're going to use the opportunity of the payday loan to grab them. The churn rate on that is terrible. It's about 50% for the industry right now. And then using the platform, start shaping behaviors and connect them up with channel partners to get them better services.
Okay, and you mentioned legislation, sorry to overlord this. If you're going to scale nationally, have you looked at some of the legislation with respect to being like a lender across the country, and are there any impediments to doing that?
Yeah, the payday loan industry is actually, the legislation for it is quite clear. In 2008, at the federal level, it was, the Payday Loan Act was in, and each province has their own differences, but it's actually quite simple. Like in Ontario, it doesn't take much, right? Pawn shops are doing this already, et cetera. So there's not a lot of legal requirements for it. The big thing is it's 60 days max, and you have a few restrictions on onboarding, but they are unsecured loans. You have to have a checking account and a job.
Great.
Any others? Oh,
Yes,
one more?
I have one last one. What are the barriers to entry for any new competitors?
I'm sorry, I can't.
Any barriers to entry?
Barriers to entry for competitors.
Oh, barriers for entry for competitors. We have a couple competitors, like Abra is similar to us in that sense. There's not a lot of barriers to entry into this market, right? It's really underserviced. No one's really been looking at it for a while. It's been heavily vilified. So we don't really have a lot of competitors in this stage, right? Secondary financial services gets kind of ignored a lot.
Okay, so what would be your differentiator then?
Our differentiator is our speed of access, the accessibility, ease of use, and just...
You're awesome.
You're awesome.
And we're awesome. And we came up with it first. Right?
Okay.
So first to market.
Thank you very much.
Thank you. Thank you all.
Clicker, microphone. Okay, you're going to hand it down there? All right. So now I would like to welcome up Cerebri AI. Please welcome them.
Hi, my name is Arun Prakash, and I'm with Cerebri AI. Our primary goal is to help large financial institutions better understand their customers so they can increase their share of wallet and keep them happy and using their own data. The holy grail of sales and marketing is one-to-one, and financial services has been talking about one-to-one for a really, really long time, and it is very, very hard. NPS scores and surveys are nice, but they're superficial and they're just a sample. How do you get a deep understanding of all of your customers? Well, we have a way. Let's consider Jennifer. She has some products with the bank, but if we're bankers, we can look at these numbers and see what her value is to us. But how do we know how she values the bank and these products? So we look at the entire customer journey, the events and the outcomes in Jennifer's journey, and match patterns to the events and outcomes of the millions and millions of other customers to determine what the contribution of each event in her journey is to how she values the bank's products. So the result is what we see here. She's happy with her mortgage, and she's really unhappy with her credit card. And the data underlying these results tells us why. Whether it was a bad user experience or a terrible customer call or something more nuanced than that. And now the bank has the power to address her frustrations and build on what's working to upsell her more products. So we answered the key questions to better understand your customers. How does your customer value you as a vendor? How do they value assets like homes and cars? And what is their financial ability to pay and pay more? And we also quantify the amount of unintended bias and discrimination in the results so you can answer the regulatory questions that come from the use of AI. We have 3 Fortune 500 customers in 3 countries. One is a $100 billion plus financial captive. Everybody is spending on AI in the enterprise. The market size is projected to be almost $50 billion in just a few years. Our customers choose us because we provide a total enterprise solution exclusively focused on the customer journey. Our team of 25 has beaten Gary Kasparov at chess, built spaceships, and has been doing AI research for 15 years. So, if you want to unlock your treasure trove of data and better understand your customers and finally get to one-to-one, come see Cerebri AI. Thank you.
Well done, and right on time. Okay. So, let's go for questions. Dave.
So how are you managing customer opt-in? Is this behind the scenes completely without sort of a customer acknowledgement up front that you're using their data to present these offers, or is this is purely passive to the customer? And if so, are you bringing in other contextual data from outside of the bank to sort of better protect or better present those offers? So it's two questions, really.
Yeah, so with respect to customer opt-in, so you're talking about the end customer?
Yep.
So the bank, no one has more data on your customers than you. So Google may have your calendar, but you have the proprietary data on your customer interaction. So you have that data, that's your data. One part of our engagement model is to go behind the firewall so that we don't compromise your data. And so that data is there. And then the second part of your question was?
How are you enriching are you using just the bank data, or are you pulling in other data sources, geofencing, other things to sort of present offers in context, or is it or just pure bank data?
Yep, so we're doing both. The interesting thing is banks have a lot of data, and we encourage our customers to master their own data first. But then we bring in the external data that they source through, whether they have social media logins of their customers. They can bring in weather data. The beauty of machine learning is you can bring in data as long as whatever's practical, and the models can be trained on what actually impacts the results.
Great.
So if I understand correctly, what you do is you go to a bank and you take their customer data and you analyze it, and you then help them upsell other services or service the customer better, like the banking customer? Is that right?
Yeah, so the goal is at the end customer to take the results of the values and figure out now build use cases on those. So one example is if you have a value on the balances that we showed in the example with Jennifer, now the teller can see that data and quickly learn without maybe an hour of training max to know that Jennifer is happy or unhappy and get some guidance on why, and then can take it from there.
Okay.
So that's one example.
So if I was at Bank of America and we bought your services, I would want to make sure you didn't sell, let's say, to CIBC or somebody else. How do you manage that, and is that an issue?
The data is the customers. The models that we build are the customers. So we keep it behind the firewall. The learning that happens in the brain of our scientists continues. The learning of the models is part of the model that we leave with you at the customer, and we let you play with it. We let your integrators play with it. We want to be part of the ecosystem and make everybody happy. So we're here to build the models and get you results and let you guys take it from there.
Okay, so it's a specific model, let's say, per bank that varies to then the competitor.
It would vary, yeah. It's based on the originating data and the
Okay.
context of that data.
Right, all right.
And how are you thinking about your business model? What part of it is services initially, and how do you see that over time?
Yep. So typical engagement starts with a proof of concept and building up the model and making sure that we can make predictions with a high level of accuracy. And then we get into a deployment phase, which we initially look to find a way to get in without taking too long in the bank's IT systems, but finding an area to pipe in or bring value and payback right away. But then what we do is for business models, after the proof of concept, we're in a monthly SaaS subscription mode. And then after the first year, we're into long-term contracts on a similar method.
So currently your 3 customers, they're all currently structured as a services contract, and then eventually you expect them to convert into a recurring type model.
Yes, so we're doing this services contract for the 3 that I mentioned. We have one smaller customer I didn't mention who's on a subscription, but they're not in the Fortune 500.
Any more? We're set. Well done. Thank you very much. So hand that to the next. Now I'm going to welcome up, and please help me, FinAI. Yeah, he's going to need that. Or give it to the next guy.
Hi, my name's Scott Walker. I am the VP of Growth and Partnerships at Fin. Fin is a personal banking and financial management assistant powered by artificial intelligence, delivered through your customers' favorite channels, including Facebook Messenger, Alexa, SMS, and web chat, amongst others. We work with clients like ATB Financial and Thinking Capital, and of course a few global banks that I can't mention yet, to help them add value to their clients' banking relationships. We've been featured in publications like USA Today and VentureBeat, as well as being selected at Best in Show and Finovate Asia. Our current ARR is at 1.2 million for the year, and we expect to hit a revenue of over 3 million by the end of the year. If this is how customers banked yesterday, then this is what I see as banking today. Why an image of Alec Baldwin in his underwear? Well, it's Alec Baldwin. But in this ad for Alexa, Mr. Baldwin is trying to sort out what happened the night before. Tellingly, he's holding his phone, but he's speaking to Alexa. This says to me that AI is the new UI. Customers already have the expectation of being able to order socks, check the weather, Google themselves to see if their previous night's antics made the news, and complete any other task using technology that is responsive to them. 1.2 billion people use Facebook Messenger every month. 50% of your customers prefer to chat to customer care than to call. And 69% of consumers already interact with a virtual assistant every 3 days. So this is banking yesterday, and this is banking today. Everything I'm going to show you quickly here is already in production with ATB Financial in Alberta. This is a fully featured banking deployed in voice and message channels for them. What I'm showing here is a categorization using PFM to understand purchase history based on, in this case, I believe it's coffee or food. We track the engagement data here over time to be able to make recommendations around budgeting and financial wellness to assist your customers to achieve their goals. Another thing we've already deployed as early as March of this year for ATB Financial is the ability to move money in Facebook Messenger. So this is already in production, secure, and approved with their bank. Their customers can move money, pay bills, and do e-transfers all through Facebook Messenger. Another component of the platform that we've built from the ground up specifically for banking and financial institutions, only using domain knowledge for you, is around customer service. We have over 300 productized intents already. We customize the answer sets to match your specific business needs. And then when we have an answer that we can't source through the bot, we pass a human agent, then update the model with that additional content to improve over time. There's a really boring, obvious ROI statement here about cost savings. I'm not going to do it.
And now I have to stop you.
Anyway, we see this as the future of banking, so if you'd like to chat about it, it'd be great to know you more.
Well done.
So what is your typical sales cycle? I understand you work already with ATB, with Thinking Capital, so.
Yeah, we start with a POC typically, and then it's banking. So there's a long security and consultative effort around bringing our technology into the bank and having it approved post-POC. But we're actually using that time in production to train the bot and adding additional features and configuring them to meet the specifications of the client. So we look at a typical, we can install this thing in 3 months. Like I can flip this on for you tomorrow, but the realities of engaging with a bank is it's 6 to 12 months to get this into production. And the reality is that I think it matches well with NLP training.
Interesting. Dave?
Scott, when you bump up against somebody like Personetics or Casisto, sort of two other well-known sort of vendors in this category, how do you outsell them or position yourself around them as a differentiator?
Yeah, that's an awkward one because I have to say services, which is terrible as a tech play, but I think the testimonial of we actually got this in production with a bank is a big deal. We're the first in North America to deliver money movement in Facebook Messenger. From what I understand of Personetics, I think they're doing a good job on understanding behavior and adding value to that, but if they're not giving you a full engagement cycle with the ability to ask your balance, do the simple tasks, move money, and then also improve your financial wellness, I don't know that they're going to deliver the full package that I don't think that's consumer engagement. I think that's maybe within a division of bank, they would help that division achieve their goals, but I don't know that's customer-centric.
Thanks.
Do you have plan to go outside of North America, or are you focusing on?
Oh no, I don't know what time zone. Yes, we're engaged with a global bank, a top 10 global bank for work they're doing in a territory, and we're working. I can't say yet, but we're working with a Spanish market bank as well, and we're already up in French, Spanish, and English.
Thank you.
Just a quick question on, I guess, a bit of the law. If it's running on Alexa or Facebook, are there any issues with collecting privacy data of the Alberta bank, let's say, using an American platform? Any of that an issue? Does that arise?
Any of the data that's personal is encrypted. So we do the conversational data is there, but that's all messaging platforms. It persists. But as for you have to enter an authentication code to complete a transaction, we actually do that hosted on the bank's web servers we embed it into the view, and then punt them back into the messaging service.
Are there any concerns that the data of Canadians might be in a US server, like any issues like that arise, or it's safe?
I think part of it is the comfort level and adoption around using new technology. I don't know that when we go through legal review that there's a fine detail about that piece. There are things where we'll do on-premise hosting or host in a cloud service that the bank uses in a region they want, but that's more with compliance than necessarily with Facebook Messenger.
Great, thanks.
What sort of tactics are you using to drive end consumer engagement with the product, and how's that looking or working? You don't have to give me specific numbers, I get it, but I'd love to understand a little bit on the usage side.
Yeah, and I mean, revenue is a great thing for a startup, but engagement metrics is far more valuable, I'd say. We're just making this available, or ATB is just making this available, and they're doing a slow, cautious rollout, which I think is appropriate. But we look at numbers that you would see on adoption of mobile, adoption of chat services for other services. I think this is if there's an adoption cycle here, it's going to be much quicker than what you saw on mobile. I think things move way quicker, and if anything, if you're not starting today, you're not going to be ready in 12 months when this thing's prime time, and you might have missed out on something. Daunting note to leave on. Thank you.
Well done. Okay, now I'd like to welcome up Lending Arc. Come on up.
Good afternoon. I'm Marco Hunstead, and I'm here today to introduce to you how Lending Arc is increasing sales and conversions in the medical industry through our online and real-time point-of-sale financing platform. So most of us have gone through the experience of financing a car, and when you walk into a dealership, you don't go in expecting to spend $50,000 on the car. You go in there expecting to come out with monthly payments that are affordable. Your salesperson didn't just sell you a car. They also sold you on financing, and they've been trained to do that. But what happens in the medical industry is much different. The industry is ripe with pricing disruptions, and the clinician is only focused on making sure that the best solution for the patient is achieved. And the last thing they want to talk about is whether or not the patient can afford that product or service. Even if finance programs are offered, they're not positioned effectively. And essentially, this is a problem that exists across the entire medical industry. To put things into perspective, out-of-pocket medical expenses make up $32 billion in Canada alone for services like cosmetic surgery, LASIK, and fertility. And Lending Arc has positioned itself to successfully address this underserved market. Now, Lending Arc isn't your average online lender. Our unique guided selling platform helps clinics introduce financing early in the consumer buying experience so that we can increase sales and conversions. Through our technology, we can underwrite an application in under 60 seconds and instantly display your monthly payment options across multiple product choices. And in the same appointment, that patient can leave with a device in hand, and then we fund the clinic directly within 24 hours. Our guided selling process positions Lending Arc to directly target medical OEMs. And this allows us to scale faster, to leverage their internal sales team, and scale quickly amongst clinics. This reduces our cost to acquire and also increases clinic retention. In the last 4 months, we have launched in over 1,100 clinics and are expected to launch in another 2,000 in just 90 more days. Now, Lending Arc has developed a winning strategy when it comes to acquiring loans. Over the past 12 months, we've achieved $140 million in loan applications. We've signed leading medical OEM partnerships. We've already started integrating into medical clinic CRMs. We've also secured a partnership that enables Lending Arc to be the only point-of-sale lender in the medical industry to finance the entire credit spectrum and boast the highest loan approval ratings in the industry. And recently, we announced a partnership with New Oak Capital that has agreed to purchase up to $2 billion in loans from Lending Arc, the largest partnership of its kind to date for a Canadian consumer lending platform. As we continue on this trajectory, Lending Arc has acquired an experienced and talented group of executives to continue to execute on our strategic vision. We're positioned for success, and we're looking for continued support to accelerate our growth. We are here today to seek to engage additional financing institutions looking to put their balance sheet to work for consumer loans in the medical industry. We are also looking for channel partners to discuss how our point-of-sale financing platform can work with your network and support as we continue to grow our national footprint. Thank you.
I've got a question. Just a comment. I don't think it's a secret that the world is facing a huge aging population issue. So I think anybody moving into kind of the disability or medical equipment space, it's a pretty good space to be in. So my question though is that are your clients that you're onboarding as a lender the medical equipment stores and then who they are lending to in terms of patients, or really just the stores themselves?
So were you asking if we onboard through the clinics?
Like the people that are borrowing are patients, right, who need medical
That's correct,
equipment?
yeah. So the borrow flow, so how we work is we work with the OEMs. So to give an example with audiology, so we've partnered with, we already actually own about 60% of the market by partnering with some of the leading audiology device manufacturers. They take our lending platform and they onboard that platform, part of their sales process with those clinics. Right? And essentially, your point about the aging population, right? Most of them, some of them do have access to capital, but a lot of the times they're looking at entry-level devices. They have sticker shock, and they don't necessarily want to free up capital because audiology devices can range anywhere from $2,000 to $9,000, and a lot of people don't realize that. And if they can, instead of paying even $7,000 for a higher-end device, convert that to affordable monthly payments, those OEMs also do buy-down programs. So our standard rate for unsecured loans is 13.9, but the OEMs can offer a buy-down program and offer 0% financing or 5.9% financing over a period of 12 to 36 months.
And just really quickly, who else is in this space? Like, who's your major competitor, if any?
So I would say there's a number of online lenders. In the actual medical space, there's a few, but the challenge with them is they're not integrated into the clinic selling process, and that's our biggest differentiator. Merchants, we actually have a merchant portal so that when consumers visit a clinic's website, they can apply get pre-approved and apply for a loan. They can also apply in clinic, and it's all done within the platform of the clinic's platform, and they can track those loans and work towards converting them. Our competitors typically are a third-party site that is a long-form application form that they have to fill out, and it's not instant financing. Right? There are other players in the space that do provide instant financing, focus on other industries, but again, they don't lead with a selling kind of UI, which we actually guide the clinics throughout the entire process. And that's what changes and increases conversions and sales.
Okay, we have time for one more.
Yep.
Sean?
I was going to ask, what's your target approval rate? And related to that, how do you think about lifetime value of your customers and the cost to acquire those customers?
So when you're talking target approval rate specifically?
So you said there were about 140 million in applications, loan applications. So
Yep.
what percentage of that was approved?
So we can now approve actually all of them. We target the over 660 credit rating for our prime borrowers, and then we sell those loans to our prime partner, New Oak. We also have secured a partnership that now allows us to actually sell those loans to the subprime borrowers to another party, and then we do risk-based credit. So we actually approve all of our loans. The 140 million, it was kind of the chicken and the egg. We needed to first prove out our loan tape through $1 million of founder capital and prove that we can actually have a default rate of below 1%, and that's what we were able to do. Right? So now we're ready to scale. We now have the capital, we have the ability to acquire loans, and now we're ready to scale quickly, and we're doing that.
Great. We got to wrap up there. Thank you very much.
Thank you.
All right, so now I'm going to invite up MindBridge AI.
Hi, my name is Solon Angel, and well, I'm going to sound like Trump, but tremendous fintech community in Canada. No? Can we have a round of applause for everyone? Tremendous. So I'm going to sound crazy, but I'm going to try to convince you that we're going to make financial crime and compliance workloads as easy as to use Tinder. Fighting financial crime shouldn't be complex. Today it's very complex. And MindBridge has developed an anomaly detection engine to reduce compliance workloads by detecting suspicious transactions. And the reason why is because I used to work in that space. I've worked in that space for over a decade now. from San Francisco, a lot of work on Wall Street. And I was the young product manager that landed that case on his WebEx with 55 people on the call from the SEC, trying to tell us how our tool sucks. And they were right, but they sucked too. Everyone sucked. And it affected the trust of the public in society. And I couldn't sleep over it. And you know why? I quit my job eventually because 10 years after, it's worse. There's an 80% surge of fraud in the world. Financial crime is the #1 type of crime in the US right now. JP Morgan was fined a couple of years ago. The CEO kept his job, not anymore. Because shareholder and society expects more, a lot more. And the journalists are quick to point finger about the failure of professionals. Harvard Business Review just did an article in October a couple of months ago. And what we're trying to do is basically bridge the gap between human and artificial intelligence to fight financial crimes. And what I mean, AI, everyone talks about it. Our CTO was the chief architect of IBM Watson Analytics until a year ago. He knows if you think about AI, he knows AI. A lot of people talk about it, he knows it. Our CEO, who told me to wear that jacket, which I never wear, is on the board of the Ontario Chamber of Commerce. He knows what he's doing, and Jim Fagan was at the Canadian banknote. They know how to serve the industry. Our advisors and investors are from Scotiabank, SAS Analytics, the SCFCS. And with us, it's simple. You connect to data, you drag and drop it, the AI figures it out. You don't have to go to building models and things like that. There's 3 clicks. We call that case detection as a service. We trademark it in the US. And we reduce compliance workloads with identify and right away swiped, fraud or not, with explainable AI dashboards that tell you how the AI came up with the conclusion. Very important with regulators. We have amazing proof point today. People say that with minimum adult supervision, we do better than existing software. We find more than the humans have found, 80 to 170% more. And Thomson Reuters just did a press release that they're integrating us in the offering because we go well beyond anything explained. Our timing was perfect. 2016 was a very busy year for fraud, and we discovered that people talk about the fourth industrial revolution, about the super auditor. We built it. It was the world's first in a central bank with Bank of England. And we're getting a lot of traction today with large, and in terms of procurement, we dealt with the government of Canada and other governments. We can handle you. Don't worry about that. So we're going to IPO because we need to walk the talk when you're in compliance, and we're raising $60 million in the fund. So it's time to work smarter. If you're serious about fighting financial crimes, come to talk to me. We'll help you reduce the compliance workload. Thank you.
Wow. Amazing. Okay, what questions do we have?
Okay, what's your plan for world domination then?
We actually have one. IPO is phase 1 of the company of 3 phases.
Yeah, but before the IPO, you need a go-to-market strategy.
Yeah, so it's threefold. So first one, we started with when you train an AI expert system like that, it's dangerous, so you have to be careful. The first thing you do, it's like, you're raising children. If you give it in the hands of the wrong people, it takes bad habits, like discrimination and things like that are important from a regulatory standpoint. So what we did is we partnered with the most intense environment, which is professional services firm that come after a case happen. They have 6 weeks to find something. M&A transaction have 6 weeks to do due diligence. And we took the best guys in the industry to be able to train the AI properly. We worked in stealth with them until we were confident that there was enough intelligence in it. The second thing is it's a network effect. The more people get in the platform, the smarter it gets. In days, we beat the humans the moment we turn it live. So the key thing here is that there's a very strong barrier to entry. Once you have the regulator using your tool and your platform, and they're the guys watching after the bank, you have all interest of using more or less the same underlying AI to use it.
Thank you.
Did you get that? Prashant.
How are you pricing your platform? Sorry? How are you pricing your product platform?
So, well, I'm from Fresh Founders, so if you don't know Fresh Founders, it's the guys behind Shopify and all those guys. Paul Lem is our founder, and he beat me up on that one. So it's similar to Shopify. There's a per-usage fee, and there's a transactional type of fee.
Okay. I'll be a little bit of a skeptic here.
It's a service, sorry. It's a service, right? It's case detection as a service. So it's a continuous delivery of services.
Okay.
Sorry. Hi, Christine.
So, yeah, hi. So for the last 10 years, as you probably know, everyone under the sun in the financial crime space, has a new solution, then a new one, then a new one, then a new one.
Yeah.
Financial crime, as you pointed out, is not going away. In fact, it's getting worse. So there seems to be this big issue where reporting is or isn't getting done or is getting over-reported, and financial crime continues unabated. So how on earth are you going to solve the problem that hundreds of lawyers seem to not be able to solve, hundreds of FIUs? The global financial system is not solving. How are you different? How can you solve it?
By sitting on top of it. So you have existing systems and data sources. Look, the beautiful thing with Bank of England, I'm under NDA, I can't disclose it, but here's what I'll tell you. They had the data already. And with existing data, existing system, they were taking hours of gruesome work. We did it in 5 minutes. Same with BDO. By the way, it's BDO National Forensic Team of the US who serve the banks. And what we do is that AI engine has something unique that was developed in the very recently, not the existing AI vendors. Like you have for the first time in January of this year, Kenny team, was able to beat humans at poker, which means they know deception and intuition. That's how advanced AI systems are, an expert system. So when you have that situation, the data we received for Bank of England, we didn't have headers, we didn't have context of it, and it figured things out better than the humans. So just think about a system that sits on top of the existing silos of information, inside of the organization or outside. We call that converged analytics.
So are you going to be able to help us take down ISIS?
Sorry, can you?
Are you going to be able to help us take down ISIS and terrorist financing?
I'll do harder than that. I'll take down the next Ponzi scheme that are running on Wall Street right now.
All right,
I argued with Lovell Hodge at TD Bank, who told me it's impossible to detect, to find a Ponzi scheme with AI. And I told him, yes, you're right, but actually you can have signals and point the investigator towards it. And he said, oh, didn't think about that. And he's running the big program at TD Bank. So we know how to find those indicators. We've proved it. Look, I didn't sleep for months well because of that Madoff thing. Harley's family was devastated by the Madoff thing. The whole Eastern board was really affected by it. We're not going to let it happen again. I have 2 guys on Wall Street that I know are running Ponzi scheme right now. They do like this to the FBI. We'll put them down.
Okay, we know why you're chief evangelist.
Woo! Thank you, everyone.
Okay, so next up, I'd like to welcome Nuco.
Thank you. Hey, everyone. My name is Kesem Frank. I'm the COO and one of the co-founders of Nuco. Nuco is very much in the business of building the future of digital infrastructure, and we do so by engaging with a platform called blockchain. Blockchain is the engine that powers revolutionary applications such as Bitcoin. So Bitcoin allows us to move money all over the world without having to know our counterparts, trust our counterparts, and completely eliminating any intermediaries. Blockchain can power this revolutionary application because it changes how we think of trust. It moves trust requirements from a stakeholder level to a system level, and that has never been done before. Now, this has broad applicability in enterprise. We can now remove intermediaries. We can remove friction from the processes that are today powering your own businesses. The potential is very well reflected in the sheer amount of organizations that are now exploring blockchain. However, there is a problem. Most of these efforts are stuck. They're stuck in the POC level. So essentially, it's very hard to move from POC, proof of concept, to production. And that's exactly what Nuco does. We bridge the gap between mainstream enterprise and blockchain technology, and we do so by focusing on performance, security, and scalability. We allow the enterprise to pick and choose between many, many different building blocks of the underlying blockchain architecture, and we present you with one single package that is pre-configured and easily deployable so you could get working fast. Our go-to-market essentially has us working directly with big enterprise clients. TMX is a good example. They just this week announced a partnership with us where we are now bringing blockchain functionality to their natural gas business. The big system integrators, such as Deloitte, are now capitalizing on Nuco solutions as part of their own global solution suite. And lastly, we work with ecosystem partners, so startups that want to use blockchain to revolutionize a vertical, allowing them to focus on an application while we take care of the actual infrastructure. Licensing is very easy. You get to try our full suite of products and tools for free until you want to introduce any production capabilities, which is when we start to charge. How big is this market? Well, it's gigantic. McKinsey forecasts that in FSI alone, we're talking about $100 billion worth of impact. And we actually see much broader applicability of the technology. So if you look at our portfolio of engagements, you see projects in healthcare, in commodities, and even IoT. I'll leave you with this thought. If you are an organization that wants to capitalize on the value of blockchain, moving to production, you should definitely visit nuco.io. Thanks.
Okay.
I understand you already have some traction. How could you accelerate that? What's your plan?
Again, Peggy, the question is traction and how we accelerate it?
Yeah.
Okay, it's very much, so blockchain is a network technology, right? A networking technology is only viable if there is someone on the other line, right? Someone from the other side of the line. What we're seeing are gigantic network effects when we're selling solutions today. TMX is a great example. TMX, you could think of them as a market maker, but in the context that we work with them, they're this super node sitting among thousands of partners. Whenever you convert one of these super nodes, everybody else aligns. Everybody falls in line and adopts a standard. And we're seeing incredible rate of acceleration for our solutions.
Prashant, you're just back from consensus. You must
Prashant?
have something.
Definitely, I have some more questions, but I'll start with a simple one. Kasim, help us understand what use cases are best suited for the platform. I understand the natural gas is one example, but what are those underlying parameters that are consistent across other use cases that can be built on top of Nuco?
Yeah, absolutely. So that's a great question because it's fundamental. A blockchain is very good at achieving trust where trust is tricky. Every time you would have a use case with a fragmented market, a fragmented interaction model, where you have many different stakeholders that want to do business together, however, they need to be able to trust each other to a certain degree, you're going to have a very natural fit for a blockchain architecture. So to Prashant's question, think of being able to now automate, create an agent that represents whatever business logic. We want to all be trade partners if it's trade finance, which is another use case that we have created. We want to be in business together, but we constantly need to make sure that everybody is playing fair. If it's financing, if it's insurance, if it's tracking movement of goods, a blockchain platform allows us to really automate and almost create an autonomous entity that oversees the progression of in this case, an asset changing hands. It allows us, because the platform itself will take care of the trust requirements, it allows us to onboard more stakeholders quickly. They don't have to trust us. They need to go through a thorough audit of the platform, and as long as the system integrity is intact, they will be comfortable joining. Auditing is another great application. Blockchain allows us to do essentially automatic audit trails, which is something we did with the TMX group. So those kind of use cases, Prashant, that's where you would see the main value out of using Nuco solutions.
Okay, time for one more. You got another? You got a lot of them. Go for it.
So TMX is an example, and you don't have to, disclose anything you don't want to. But I'm curious, what does success look like for that client, and how, at what point that gets into production and you move away from a services business to a recurring revenue business?
Yeah. So success. Success is absolutely achieving standards that are not in technology, rather in businesses. We believe, and we pretty much base our business on the premise that blockchain is going to set the standard in many different industries, where today we have to use, a lot of intermediaries, where we have to use a lot of legal services. If we present a robust model that does everything better, in the context of TMX, we will create an industry standard, and then the license is exponential from that. Thanks, everyone.
All right, well done. Okay, payment rails. It's right up here. I guess you're going to present from the lectern.
I am. Good afternoon, everyone. My name is Justin Reed. I'm the Chief Revenue Officer at a firm called Payment Rails. We've built a mass payouts API for the freelancer economy with a focus on integration and the developer experience. We're moving to an on-demand workforce connected by platforms, and this market is exploding from 55 million freelancers in the US right now to over 500 million in the next 7.5 years. That's 10x growth over that timeline. And if you're a freelance company, an online platform, and you're sending business payments globally, there's just a ton of issues with how you do that. Costly hidden fees, payments can be slow, payments can go missing, a complex tax regime. With our product today, you can send payments in 150 currencies to over 200 countries. And the market size is massive. It's a $110 billion opportunity. So we've built our solution out specifically for this market. You can white label it. We allow for fast integration, really no setup or user fees, and all the banking capabilities in a box that you would need to send payments globally are all included in the platform. We're also hyper-focused on integration. It's a huge part of our growth strategy, and we're already seeing that with our acquisition of customers. Integration through our API, through our widget integration, and through our web dashboard. Our revenue model is pretty simple, threefold. We're focused on transaction fees, foreign exchange margins, and monthly subscription. And our traction to date has been pretty solid. In fact, we've only been engaged in a sales effort for about the last 5 months, and in that time, we've been able to attract the interest of 14 customers for total payment volume of $335 million and booked revenue of $6 million. In addition to that, we've developed another 62 deals in our pipeline for total revenue of $30 million. And frankly, we think we can 5x this in the next 6 months. We've got a world-class team we've put together with decades of experience in the payments industry, with Tim and Furhan leading our team from a payments perspective, myself on revenue coming from Google and SaaS, and David Kobius, our VP of Engineering, with 23 years of experience in the market coming from Yahoo and Adobe. I'll also emphasize our advisory network. Scott Thompson, former president of PayPal and former CEO of Yahoo, is both an investor and an advisor. And I emphasize the word active because it would be really easy to put some faces up here on the screen, but he is engaged with us and is working us through our model. We're also getting deep expertise in the regulatory and business environment from Matthew and Andrew, and we have a couple additional board announcements that are imminent. Again, thank you very much for listening today. Appreciate your time. If you're having any challenges with cross-border payments, we'd love to hear from you.
Well done. Good job.
So just really quickly, it sounds like a great idea and great growth, but I'm having a little bit of problem trying to understand what issue you're solving. I mean, I don't know about anybody else, but I've never had a problem receiving a payment or sending one out, like as a company. So what is the issue that you're solving?
Yeah, I think the issue is that we've got a high growth part of our economy in the freelancer, temporary worker space, and there's a number of platforms that are being created and that do exist today that are servicing this freelancer community. And if you're making hundreds and thousands of payments a month, again, with the focus on mass payouts, there's just a tremendous number of challenges in doing that.
Okay, so they all go through you to do their payouts?
Fund their account through our platform and pay out, again, to 200 countries, 150 currencies. And we're working on adding additional channels and methods, but the goal is about 25 different choices, if you will, for that receiver of cash at the end of the day.
Any issues that arise on the legal front with sending money out internationally or maybe taking it in?
No, I mean, we've got a large back-end bank that's our partner on the back end. We've built the technology to sit on top of this banking infrastructure. So from a KYC, CD perspective, in terms of onboarding a customer, we've addressed that part of our business.
Great.
Can you walk us through the revenue model exactly again? So I saw some good revenue growth, but just how exactly are you earning the revenue? Is it a percentage basis of every payment that you're sending, or? Yeah,
so our key competitive thrust is really twofold. Number one, just driving an amazing integration technology deployment experience, similar, say, to a Stripe from a credit card processing perspective. The other part of our model, again, focuses on transaction fees, FX, and subscription through a software as a services model. But the thrust there is that we're low cost. So if you take, say, a $300 payment through a PayPal, it costs you $20, $21 to make that payment internationally. With payment rails, it's about $8.
So how did you get your clients? So how did you find your clients so far?
Yeah, we've got a really well-defined market strategy in terms of customer acquisition. So it's really twofold. So we look at share economy, and there's thousands of companies that make up this space. And our messaging, our sales go-to-market's really targeted at addressing this problem in this space. And I've been on board with the company for 5 months. I've spoken with probably 200 customers in that time. And we're hitting the market with the right message. They're feeling this pain today. That's one side. The second side of our model, where we think we can really grow en masse, take our customer base from what it is today to say 150, 200,000 customers in the next 18 months, is through integration with existing software as a service-based platforms. Again, that development experience around our API, integrating into online payroll, software as a service accounting, time and billing platforms. In fact, we've already seen some success there today.
Thank you.
Okay. Anything else? Good?
I have another one then.
Okay.
So what's unique with your solution?
What's unique with our solution? I think certainly the way we've built out the API, again, with the focus on the development experience. I'd love to say it's one thing. I think for us as a company in a market that has some competition, it's a plethora of things for us. It's our engagement and management team, it's our sales go-to-market, it's our product development, it's our cost structure, and in the competitive landscape. So I don't think it's any one thing. I'd love to say that it is, but it's not. It's the collection of things that are our business that I think make us uber competitive going forward.
All right. Thank you very much. Okay, 3 more awesome companies to go. So welcome up, Popcodes.
Hi, I'm Greg. I'm founder and CEO of Popcodes. The payment ecosystem, or Rails, is complex, and it's filled with disconnects. And whether your focus is on the $1 trillion processed over these rails or the billions more spent by retail and manufacturer to drive those sales, fixing the disconnects is a huge opportunity. Like the real rails, riders on this payment ecosystem really just want to get to their destination, typically building loyalty and increasing profitability as quickly, cheaply, and safely as possible. There's one device that hasn't been used yet to accomplish that, and that's the payment terminal. It's the most touched, trusted, and yet underutilized device on those rails. Our solution, which is already certified by Ingenico and Verifone, who have about 80% market share in this space, transforms virtually any terminal into an internet-connected merchant and customer engagement tool with the unique ability to add new functions and enable new services on the fly. The payment network spends about $3 billion each year to get, keep, and sell more to these merchants. And the phone calls are their primary tools used. It's very inefficient, it's very costly, and it's quite honestly very frustrating for the merchants that use that, as they typically have to wait on hold to get their needs met. Payment and service providers use Popcodes to give merchants what they need when they need it with a push of a button. Whether it's onboarding support, ordering supplies, or adding services to their accounts, improving the merchant experience, decreasing costs, and increasing these sticky, high value-added services is really easy with Popcodes. They use the terminals that they already have. Our first implementation of push-button services reached over 16,000 merchants in less than 90 days, penetrating up to 22% of the SMEs in some geographies. Through win-win relationships with multiple partners, we're both generating license revenue and building a massive merchant marketplace at a very low cost of acquisition per merchant. Those same merchants need applications that can help them connect with their customers. They need to quickly and easily deploy omni-channel capabilities that help them compete with the biggest online and brick-and-mortar retailers. And one of the hottest use cases is mobile. Through our robust API, customers can shop and pay on their mobile device and either tap or type in their credentials on the phone when they walk out, on the terminal as they walk out to generate a proof of their purchase. The same application also enables something that, given recent events, is desperately needed, the simple and secure redemption of loyalty points in store. And again, the ability to do that in scale across thousands of merchants, not just at a few. Our omnichannel solution is in use today by major brands and marketers to help them track promotions, to help them improve the execution and measurement of those across the stores. We've got a world-class leadership team, including leaders in both the payment side and in the big data space, which is obviously where this play goes in the long run. And if you're interested in getting on board, whether it's to engage merchants, to better service and support them, or to get on board with a multi-sided marketplace that's growing very rapidly, Popcodes the train is in the station, and it's time to get on board.
Great, thank you. All right, what do you got?
So who are your competitors in the space?
There's a lot of competition that's focusing on the next generation of terminals and developing value-added solutions for that, because it's very hard to develop something like what we've done on the legacy infrastructure. But the huge difference is there's about 15 to 20 million of those legacy devices in market already, and the new devices are just now hitting the stores. So our goal is to really penetrate the market very quickly and get across that wide scale before those new infrastructure come in place. We still work on the new devices, but we'll have the relationships both with the merchants and the payment service providers to be there first.
I guess I would just say that seems like a pretty phenomenal growth rate for your 3 months. And so the idea is capture the market in terms of the old legacy ones and then just morph into the new machines so you can obviously just keep going one over the other. Is that right?
Yeah, well, the unique aspect is that we're really, we're hitting the payment terminal, you know, that internet-connected device instead of the point-of-sale system. So we can leverage the terminal management solutions to deploy very, very rapidly. That 16,000 was just on new installs. We can actually push to tens of thousands overnight with our solution as well. And so that's the key. Get on that payment terminal that's very common and very well connected across the network, and then communicate to the point-of-sale systems from there.
And when you said there was some marketing component, what does that look like? And who are you marketing to? The person who just used a debit card, let's say, at a machine, or?
Well, so we're actually the enabler of the in-store experience for those consumers. So we're not the marketing engine themselves, although our APIs will allow a personalized marketing promotion to send us the name and to send us information about the customer and that specific offer. But then we send them back a unique code to connect to that offer. And the customer can either type or tap that code into the terminal to retrieve that promotion. And that can come from marketers like CPGs and manufacturers, or it can come from the merchant themselves.
So just so I understand it, you'll be at Subway and you'll get some sort of a code, or the merchant will say, look, it's 10% off for just being here? Is that how it works?
They've used both, actually. So Taco Del Mar is one of the largest implementations. One of the most effective tools they had was a simple in-store sign that said, come in next week and enter code 1234. And then they took that away the next week. And that drove massive amounts of traffic to their store. They were also able to, for the first time, to be able to measure radio. They did a radio announcement, made up a code on the fly, implemented that across all their franchisees, you know, through one interface in our online environment, and then tracked that radio was driving customers much more effectively than the social side, which they were able to track too. Again, that online to offline tracking capability is something that's extremely unique to our solution.
What does your revenue model look like?
So we generate revenue initially, and really more of a break-even model in the software licensing. The payment processors pay about $1 per active merchant per month, but the longer tail is really in two areas. Merchant subscriptions, as they subscribe to promotion, tracking, loyalty points redemption, or you know, that mobile proof of purchase. And then ultimately, this is where my expertise is anonymizing and aggregating that share of wallet view across a massive number of merchants. Again, that does not exist. FD Partners called it the Holy Grail. And as soon as we can prove to them that they're building it, they're on board.
Okay. Thank you very much.
Thank you.
Join me in welcoming out Senso.
Good afternoon, and thank you very much. I'm Sarup Barwani, founder of Senso. At Senso, we're developing the mortgage broker of the future by helping lenders and brokerages acquire, onboard, and retain profitable customers through action-driven insights. Lenders in the room, here's the problem. You're familiar with all of them. You're paying way too much in acquisition costs, $1.2 billion to the broker market alone in 2016. Exposure to fraud and misrepresentation, and poor funding ratios. Post-funding, you collectively experienced $49 billion in industry-wide volume churn just last year. Unpredictable refinances midterm. These are your customers going to your competitors. Ultimately, these are customers that you paid a lot for initially at origination. Why is this happening? An outdated business model, commission-based brokers. Senso is taking this model and flipping it on its head. Introducing the broker of the future. By empowering these brokers, making them salary-based service brokers powered by AI, we're lowering the cost, churn, and fraud, reallocating capital to provide better rates for borrowers, providing job securities for brokers, and enabling them to provide home buyers with an exceptional customer experience. So how are we doing this? Our team of designers, scientists, and engineers partnered with a licensed brokerage partner earlier this year, backed by a leading AI accelerator. We rethought the entire process. We started by launching this automated pre-qualification chatbot. Our real estate partner of 720 real estate agents are pushing home buyers to this. 60 seconds, 10 questions versus spending an hour with the broker. Then, our proprietary patent-pending machine learning model assesses the customer in real time based on historical data and provides approval predictions and rate recommendations so the broker can make better decisions about their customers up front. We also provide refinance predictions to the brokers so they can proactively reach out to their existing customers and retain them before they go to a competing brokerage. So here are the May results. 15% increase in volume capacity, 7% increase in funding ratio, 9% increase in retention, creating just under $15,000 of additional revenue to our brokerage partner. This also allowed us to have our first revenue-generating month, just over $6,000, taking 5% of their gross commission. This is going to increase to 10% gross commission in our launch in a few months. The market's pretty big, so now it's just about scaling, signing more brokerage partners throughout North America, and it's a $1 billion annual revenue-generating opportunity. Our competitors are focused on process optimization, going straight to consumer, and human replacement. We're focused on taking this amazing technology and empowering human beings to do better at their jobs. We're 4 months into this, we've proved that the science works, and now we're looking for an innovative lending partner to provide benefits to them. We're also looking to raise a $1.5 million seed round to launch in Canada and expand to the US. Thank you very much.
Well done. Right on time. Okay. Judges, questions for Sean?
So just so that I'm clear, you're providing the product to the brokers and helping them improve the services they provide. So why not replace the brokers completely, cut them out of the picture?
We feel that that human interaction, especially during a home buying experience, being a very emotional experience, you still need someone by their sides. Now, we are replacing a lot of the tasks that they do instinctually to provide like approval predictions and whatnot, left to the AI so that they can be by the side of their customers. We're empowering human beings, and we feel that they need to be involved still. Also, they're the last point of decision, right? So it's not like we're relying on our AI to initially kind of make that decision. We'll train it over time, it becomes better, and that's sort of what we're thinking over time.
And in the long term, do you see yourself becoming a broker yourself as a company, or?
Right now, we're partnered, I mean, the brokerage owner is sitting right there, so that partnership is doing us well right now. I think as the predictions start getting better, I mean, I think we'd still empower human beings and potentially merge with one of these partners.
Okay.
Not that this is a negative thing, but you seem like you're really just a chatbot for mortgages, which I think is really cool. And if that's the case, why not just market we're a mortgage chatbot with these great results?
It's more, the chatbot is just for incoming customers. It's really putting those predictions in their hands, those real-time notifications saying, hey, your customer's about to leave, or this customer could get approved by lender A, B, or C, right? It's really the predictions that are going to get stronger over time. Really why we're bringing on board lending partners is because we're controlling the cost of the capital right now, we can provide better rates for borrowers, which is ultimately going to provide more volume for our lending partners. In exchange, we can use lenders' data to provide better predictions up front. So it's a two-sided benefit.
So after the chatbot experience, then what happens?
So then the broker gets a notification that a new customer comes in, and it's basically a customer list. They can instantly see the prediction of which lender to send it to, and they make the ultimate decision. And then for a refinance, it sort of sends them a notification, say, hey, your customer's about to prepay, proactively reach out to them with a few clicks, whether it's through chat or a phone call, and then do a good job because you have the warm lead, right? You have that relationship, retain them through that versus a cold call through a bank.
And on the customer side, if I'm using the chatbot, it's telling me go see Bob Smith, 2 days from now for a remortgage?
Right now, the broker's reaching out to them through email, phone call, but I think that the experience, I come from a user experience background, so the experience will get much more seamless over time. So there's an ongoing relationship between customer and the broker or the sales agent.
Right, okay.
Okay.
How long is the implementation?
What's that?
The
Sorry?
implementation with your partner, how long is that?
Implementation with the brokerage partner? Yeah, so we tested this out with about 35 brokers, and so it's end-to-end from all the way from realtor to the lender through Filogix right now. We're looking for a lender partner just, again, to provide better predictions up front. We still see ourselves going through Filogix to get distribution throughout all the lenders.
And how long did it take to implement that?
Oh, so yeah, we started working with them in February. We spent about 2 months digging through their data, creating the models. There's about approximately 3 models, and we tested it in May for the first time. So we started this in February 1st with Next AI, and then we're here right now.
Okay, thank you.
Okay. One more?
How are you finding the broker channel responding to the fact that they're no longer on commission? Because the whole appeal of being a mortgage broker is uncapped lending, and that's what makes them a highly efficient and effective channel for the bank. So telling me I'm now going to earn a salary, that sucks. So why am I going to use your platform?
You know, I thought that too initially. It's funny because 80% of the market just doesn't do good with the commission-based model. They either do it passively or they just aren't able to make enough money to treat that as their main salary. 20% of the market does well, and we're seeing this in the brokerage right now. 20% capitalizes on the commission they earn. They're very high-stress jobs. Basically, what we're doing is we're evening out the marketplace, and we're providing everyone with equality.
Okay, got to stop you there. Thank you very much. All right, we have one more. Zigra, welcome up.
Hello. So thank you for this incredible opportunity to address our industry's best and brightest. I am Deepak, CEO and co-founder of Zigra, and I'm excited to be here.
Energy. Woo!
Let me start by telling you a real-life story about Amy, one of our interns. A short while ago, she was traveling to Beijing when she got this email receipt from Uber. For some reason, Uber thought she had gone for a joyride to the heart of East London for £300. What really happened was that a fraudster had compromised her credentials and impersonated her. So we asked ourselves, how does Uber know whether it's really Amy who's logged into the application and not some fraudster who's compromised her credentials? And figured out they don't. And this happens all the time on applications, from mobile commerce to payments and even banking. The issue is that today authentication is just a gate. And once you've passed that gate, you can change passwords, make payments, and drain entire bank accounts because there is no continuous protection from login to log out. You can buy anyone's credentials online for just a few dollars today. Here's an example site that shows the information of more than 3.7 billion compromised accounts. Now, this is an issue not only for consumers, but also for businesses. They suffer huge losses due to chargebacks and reputational damage. These problems are real and quantifiable and cost businesses $40 billion annually. So how do we solve this problem? What if our phones and apps were able to uniquely recognize us based on our habits and interaction patterns? Our solution is available as a mobile SDK that can be integrated into existing applications with just a few lines of code. We then learn the user's habits and interaction patterns as they use the application. We take a look at how do they hold the phones, the angle they hold it, the pressure they apply on the touchscreens, the acceleration which they move. Read through hundreds of the sensorial data points, send it through our sophisticated machine learning algorithms to create a unique cognitive signature for the user, and use that for continuous authentication from login to logout. There are around more than 1 trillion transactions that are being generated between mobile banking and commerce today, and growing exponentially. Zigra's technology can be used to secure each of these transactions. We're looking at an addressable market of $9.2 billion by 2020. Now, to build a solution like this requires a very sophisticated team. With backgrounds at Amazon, Samsung, and Nortel, we bring together over 50 years of combined experience in security, AI, machine learning, and behavioral biometrics. Our technology is backed by 7 years of academic research and protected by over 14 patents pending and granted. We're currently working with some of the top financial institutions across Canada, the US, and with Barclays in the UK. Zigra places the intersection of human-computer interfaces, artificial intelligence, static and dynamic biometrics. Whereas our competitors focus on 1 and 2 layers of authentication, we provide a complete 360-degree view of a user to provide confidence in interactions, a frictionless customer experience, and a rapid time to market. To see us in action, please drop by, and we would love to chat. Thank you very much for your time.
What do you got?
Deepak, can you tell me a little bit about the future of biometrics, especially embedded in Apple phones and sort of all the mobile phone, and how that might potentially impact or disrupt what you're doing? I love the behavioral always-on authentication piece that you're doing, but the pervasiveness of biometrics on Apple, for example, can really, I think, impact that.
Absolutely. So as we kind of talked about before, authentication of the login is just not good enough. So credentials such as PINs, passwords, and even fingerprints have been compromised. In fact, a few months ago, 5 million fingerprint records were stolen from the Office of Personal Management in the US. So we think there's not a single bullet that can solve the entire problem. So that's why, if you look at our patent, it kind of combines combines all these different layers, including biometrics, including social intelligence, including location intelligence. So we bring it all into our AI engine to provide a single score that kind of takes into account all these, to provide a continuous authentication from login to logout.
Cool T-shirt, by the way. So the customers you have today, obviously before you went to them, you had tested this product internally or whoever in terms of a beta. How did you do that, and what type of data sets did you use to do that, and
So
what's the experience with your customers today?
So I'm going to tell you about an experiment that we ran with...
no cheating, just talk.
No? Okay, so we ran an experiment with around 25,000 users across 70 countries on 700 different device types, gathering their sensorial data points. And what we found out was that each and every one of us had a pattern, a way of interacting with our phones, apps, and tablets that's as unique as our DNA or our horrible golf swings. Right? So it is that uniqueness that forms the core of Ziggurat's technology. So we had kind of run it across all these different countries, and that's what we took to the banks and said, this is how we have done it. Here's an SDK, try running it. You can see the results right away.
And what is your pricing model?
So we have two models where we have per user per month, and then a transaction-based licensing model on top.
Any others? Good to go? You got one more.
Just a quick follow-up.
Okay.
So the customers you have today, is it Barclays you said?
Barclays in the UK, yes.
Okay. So how are you working with them, and help us understand the journey with Barclays, and how do you see yourself expanding into other banks?
So we went through the Barclays FinTech Accelerator in London, in the UK. Went through that. Within 2 months, we signed a paid POC, went through their demo day, and got to the first phase of our pilot, completed that successfully, and then we got into something called the Launchpad. So Barclays has a sandbox environment where they bring in 18,000 of their live users and work with these new exciting features, right? And they test it in a live environment like that, and then they get their results. They look at the 2 key matrices that we look at, and the idea is that if it works well, they then can switch the plug and then go into production right away.
So is it live today with Barclays customers?
So with Launchpad, yes.
Okay, with Launchpad,
we're working on getting it into production.
Okay, got it, thanks.
Time for one more? We're good? We're good. We're good.
Thank you.
All right. Why don't you give me those? 10 great startups. They did a lot of work. I've coached thousands of startups, and I've done 6 myself, and getting up in front of an audience is always hard. Sometimes it's fun, but it's always hard. So join me in thanking the startups and saying congratulations on a great show. I also want to thank our judges for asking some great questions. I hope you learned from it. I know I did. Thank you. And I don't know if we got it on here, but I also want to thank again CIBC and PaySafe for supporting this. Okay, so where we go from here is us judges are going to go caucus. Sometime during the night, 4 of you are going to find out that you're presenting first thing tomorrow morning. So I want you all to come back and see the 4 finalists tomorrow morning. Thank you very much. And if you liked what was going on here, please tell Payments Canada to continue it. Thanks.